So I'd like to talk about technical analysis in this video and how important it is to really understand what's going on in the environment around you. You need to see what's going on and understand it. So why do we use technical analysis at all in the first place? Well, it turns out that no one knows the future of stock prices. They don't know the price it's going to be in a year or a week or a day or even in the next 10 minutes. So technical analysis is the best information that we have to try to predict what it's going to do next. So it's no guarantee that the stock is going to do what it's done in the past, but it's the best information we have to make a prediction. Okay, so this is a daily chart of American Airlines, and this is going back over a month. So it's December here, going back into most of November. And we see that American Airlines has been in an uptrend during that time. So what I see here that's important is, besides the fact that it's in an uptrend, you see these tails on top. Those tails show that within the day, the price got up to a point where sellers pushed it back down within the day. So up at a price of around $51 a share, they think that's enough, and they're willing to jump in and sell and push the price back down. And that happened 1, 2, 3 times towards the end of November. And then it came back down. Finally, it pushed up a little bit further. And again, the sellers didn't let it go much further above 51. Here we see right around approaching $52 a share, around 51.75. And the stock is still having trouble going above that. The sellers are jumping back in pretty hard. So we see that the uptrend is starting to go more sideways than up. It's still going up a little bit, but not a lot. So that's the environment that you see. And we see that right now we're up here towards the high end of the range. So in the last little while, the low end is around 50 and the high end is around 51.75. Now let's zone in on the close-up picture. And that is going to help us to know what the stock might do on an intraday basis. Okay, so this is American Airlines today, which is December 19th, 2017. Let's get back to the open. Okay, here we are. So I hope you can see that. That is kind of small. But we see that the initial range on American Airlines goes from about 51.30 all the way up to 51.80. So that's a 50-cent range, and it's pretty volatile in the beginning. And then the stock starts to have a smaller range. It's snapping back and forth. You'll notice as you go through this that the main direction is sideways if you look through the whole chart here. But then the range tightens from about 51.40 up to about 51.65. So that's a 25-cent range, which is playable. You could buy your 100 shares somewhere down here and sell it somewhere up here and make your profit. And if you can catch over half of that, you're doing really well. That's my sign of a successful trade, catching at least half the move. Okay. So that's really good information to know. Number one, the stock is mainly going sideways, and to short near the top and buy near the bottom. Good information, and also to know that the range is about 25 cents after the initial move. Well, if you go back, excuse me, if you go back to the previous few days on American Airlines, it's pretty much the same. You got an initial move that's really volatile, anywhere from 25 to 50 cents. And then it goes smaller range, mainly sideways in about a 25-cent range. Well, that's great information. That helps us understand where to place our buy orders and our sell orders, where to put our profit target, as well as our stop loss orders. So really good information. Now, this is going to be very different depending on the stock, because for one thing, every stock has a different level of volatility. Tech stocks are going to be a lot more volatile generally than, say, a stable retail company like Walmart. that's got a pretty stable level of sales every month and every year, something like that. You've also got, based on price, a 1% move in a $100 stock is a lot bigger than a 1% move in a $10 stock. So the price makes a big difference as well. So let's talk about it. Since the market has been going straight up for the last several months, in fact, all year, the market's up about 20%. What strategies generally work well when the market's going up? Well, you've got breakout strategies. When stocks are breaking out to the upside, you buy them. Also, pullback strategies. If you don't want to try to catch it in the initial move and it pulls back, maybe around 10 o'clock it pulls back and starts to go up again, you buy. That's a pullback strategy. You could also try to do the counter trend move, which is a reversal strategy around 10 o'clock. That's if you think that the stock is going to keep going down and not reverse and go back up. You can try to play it either way. Okay, but those are three good strategies for an uptrending market, and those are worth looking at. And again, if you choose 3 to 6 stocks to look at on a regular basis and really know their ranges like I've showed to you here, that's going to help you in your trading. So just be aware of that. That's what you can do to know your stock really well and make money with it. And I hope that helps. So this is Greg Kilpack with Trader to Be, and I'll talk to you soon in the next video.